Are you serious, folks? Are you serious? Well, we are extremely serious in this broadcast today. We want to welcome you. I'm Pastor Paul Begley, and this is, of course, the coming apocalypse. And today we want to talk about big debt, 2021. Going into this year, 2021, big debt, big inflation, big taxes, big spending, big tech. Is America going to go big bust? Well, I tell you what we need to do. We got to find out from the expert. And $27 trillion in debt. What is the plan for the nation and money and gold and precious metals and stock market? And what about the virus? How do we get through this? Let's get Colin Plume with us. Colin from noblegoldinvestments.com. That's www.noblegoldinvestments.com. Colin, great to have you here today.
Yeah, thank you. Yeah, it's we're in an interesting financial paradigm in terms of risk. Is, if you read everywhere why the stock market's doing so well, why things are don't look as bad as what they should be. Obviously we have the most unbelievable government stimulus, government generosity that we've ever seen. And government generosity is, it's sort of my tongue-in-cheek way of saying that's our generosity, right? I mean, obviously it's coming from us. But we have this year where risk, at the end of the year, people are feeling good that the world is just going to go back to normal and risk is up. That's why we've seen a recent sell-off of gold, because people are getting back into the markets. They're feeling more comfortable with, being in a more risky position. And it's sort of for me, it's too soon, I think, in terms of a strategy to get back into being into risky investments again. There's still, as you mentioned, we have $27 trillion in debt. Most of the United States is really not open. And, depending on who you believe and who you read, it's pretty unlikely that most people in the U.S. will be vaccinated before, July, August of next year. So that means we will have been under a sort of quasi lockdown since March of this year. A year and a few months of a lockdown in a country is going to have repercussions. And for anyone that doesn't believe that, if you go back to, the Spanish flu in 1917, the repercussions of that lasted for more than a decade. And I think anyone that is watching it right now will realize that the repercussions to our economy will last at least that long, based on what we've been going through. So everyone's back to being risky, and so we've had the sell-off. But I will tell people, gold still, as of right now, this year, safe haven gold is up 25% year to date. So I think a lot of investors are pretty happy with that return.
Yeah, that's exactly right, Colin. I mean, I think it was around $1,300 and some dollars gold was at when this year started. As of today, it's at $1,840 or something right now. I think it's down a little bit today, but still $1,840. So as you said, 25% for the year. That's huge returns. And besides the fact that gold, I think in 2021 is even going to go higher because the instability of the inflation, of the currency, of the dollars, as well as the whole world market is going to slow much, much more with all this quantum easing. There's going to be a lot of inflation. And you're right, gold and silver, precious metals are going to be the commodity, if you will, the assets that are actually valuable. Because a lot of these companies in the stock market, they're based on potential, not profit. Look at Tesla. It's going sky high off the promise of something. So right. What's your thoughts? I mean, people, they should not only consider gold as a safety net for their retirement, but is it also a possible strategy the next 12 to 24 months as a good return investment?
Absolutely. And you're right. In terms of where the stock market is, a lot of it is based on where the potential is. A lot of it is based on a lot of these new ways, these micro traders that are out there that are looking for quick returns. And that's really a recipe for disaster in the long term. Anyone that has made tremendous wealth has always, bet long term. You look at a guy, David Einhorn, Greenlight Capital, when he started his fund 13 years ago, he started with about 900,000. Now they're sitting at about 13 billion. They have in that fund, that very strong fund, they have about 15% of their assets in gold. And the reason is because there is, and this is from his words, there's no way that we can recover with all the money printing and all the debt that was accumulated over the last 10 years, but especially just this year. I mean, if you look at the amount of US dollars circulated, I mean, you have the charts there. The growth of money out there is astronomical this year. I mean, we've really printed money to no end. So, when you have these hedge fund managers that are saying, "Hey, I gotta put something strong in my portfolio to protect myself," and they're putting it into gold, it's obviously a very good sign for where the markets are going to be. And I think silver, silver's sort of been that metal that has had that potential. People like the potential growth in there, but it's never really matured the way that it should in perspective to gold. But right now, the writing is on the wall for silver. If you go to check out our YouTube channel, Noble Gold Investments, you'll see I have a number of videos talking about all the industrial uses. And really, if all of the green energy initiatives come into effect, if we go back to the Paris Accord and we start pushing all of this green energy initiatives, there is not enough silver in the world to keep up. And you can see that I have a number of videos discussing that on our channel. But so you have these two metals kind of hand in hand that can really protect your portfolio. And I think right now it's a really good time to have a duck and cover strategy, not to be so aggressive. And I know that it feels good to look at your portfolio there, but when you have a correction, this year we had a pretty massive correction over 1 to 2 weeks of over 10%. That's usually a sign that we're going to see a bigger correction coming. We had one this year. You remember it earlier this year. So people just really have to look at their portfolios and make sure that they're hedged appropriately, especially if they're really close to retirement. You don't want to be over leveraged in equities right now. I think there's too much risk.
And Colin Plume is with us, folks. Colin Plume, noblegoldinvestments.com. You can call him right now at 877-646-5347. That's 877-646-5347. Let Colin Plume or one of his associates help you. I mean, you're talking about this, the debt ratio, and I was looking at your charts. It is because of this massive printing of money and spending, trying to keep America afloat. Look at this. What country increased its debt by 170% in 12 years and expanded its money supply fourfold in the same time frame? No, right. Not Zimbabwe, America. This is a dangerous recipe, isn't it?
Absolutely. And people are seeing it already. I mean, you can see it when you go to the supermarket. The cost of goods have already skyrocketed. Costs of, meat and fruit and vegetables, all those things are going up exponentially. And I think that, we're seeing a definite shift in the economy. Hospitality, which is a very dramatic place in terms of employment in the country, is like we said. I mean, if we're still shut down until July of next year, we will eventually just be shut down for about a year and a half from the beginning of this pandemic. So that place where people typically have jobs, where typically they're, maybe it's a second job, a weekend job, those jobs are not going to come back that quickly. And, who knows when travel will go back to where it should be. I mean, it's still, a lot of people are probably are not going to be able to afford to go anywhere anytime soon. So, you have a lot of major employers that are not going to be able to hire the way that they're used to hiring. And I think people are really going to hunker down and be conservative until we can see the end of this, what's going on in the world and the virus. So we need, unfortunately, the way our economy is, we have to spend. We have to get out there and spend money with local businesses, and that's the way we're set up. And when we're not able to do that, there's definitely repercussions. And I think people today are looking at what they can do to kind of better themselves. And really it's important to make sure that as a family, everybody regroups and thinks about, the future and what's really important, what you really need to live on, and try to hunker down and get those costs down to a very affordable level, because we don't know how long the repercussions of this pandemic are going to last.
Also, Colin, there's a lot of talk about a global reset. And I know Justin Trudeau actually brought it up a week ago. We're hearing about it by the United Nations, the World Economic Forum. Joe Biden's talking about it. Can you tell us, what does this mean? What do they mean? Global reset. And are we talking one world currency, or just a whole shift in the entire way money is managed globally? What does this mean?
Yeah. I mean, the last currency that's accepted worldwide is the euro. That's the last one that was created. Could we see a currency that would replace the U.S. dollar? And that's would probably be the only way we can get out from under some of this debt is going to a new currency. So I think that's why a lot of people are sort of talking about this, is how do we move in that direction? The flip side of that is, if we go to a world currency, we as the U.S. lose our authority as the currency of the world. So it does limit our ability to have that ultimate control of how much money we can print and how much we can manipulate. So that's why I think it's from the U.S. point of view, it seems pretty unlikely that we would want to push that. But that being said, if China says eventually, hey, all these bonds we have, we want to call these in, and we want you guys to pay it back. And obviously we can't pay it back. We don't have, we maxed out the credit cards. Maybe that's the time that we have to go to a different currency to kind of sweep that debt under the rug. So there's a lot of things being talked. I think, the administration that's coming in is different in terms of, the mentality, whereas, Trump was very much focused on keeping, growing jobs here in the U.S., whereas, the new administration is kind of looking at, being more of a global partner and, being amicable to other parts of the world. And that doesn't really help us right now, especially when we have so many problems here. It'd be much better to just focus here on the U.S. and fix a lot of the problems, focus on jobs, focus on manufacturing. That's really what we need right now. But I don't think this new administration is going to go in that direction. And that makes me really nervous.
Colin, you've got a great video here I think we'd like to show everyone, and I think this will help everyone understand how much your company at noblegoldinvestment.com really can help you, the folks out there in this troublesome world. We'll be right back with Colin in just a minute.
It's been interesting for gold investors, to say the least. After surpassing its all-time high, it's been resting in the $1,900 range before dropping in the $1,800 range, then back to $1,900. This seeming volatility is inspiring investors to ask, when is a good time to buy gold? Should I still be buying gold? Is there anything left to gain, or should I cash out? First, I would say don't panic. Pullbacks are common. In fact, they're expected. It's true in every investment you're going to make. There's no single investment that will constantly be bullish. That being said, the price shifts of gold in the last several years are by no means wild. In fact, now, in my opinion, is a really good time to buy gold, because all of the economic factors lead us to believe buying gold is a good opportunity. And I can't honestly think of anything more perfect right now than a gold investment. And there's two general reasons that it's a good time to buy gold. One, gold's rising potential industry is one of the reasons that people should invest right now. There's an increase in demand for communication devices, phones, data servers, computers, medical research, aerospace. Obviously, we talked about curing cancer. There's some research going there. All these are heavy users of gold. Second is just the global political economic situation, social instability. We have an election coming up. We have fundamental concerns regarding the US dollar. We're still fighting everything going on with COVID and whether we're going to reopen or not. And then the biggest thing, in my opinion, is just the unprecedented amount of stimulus, the low interest rates. It's the perfect opportunity for gold. There's other factors there too. People see gold dipping to 1800, they may get nervous. And a lot of people were saying when it hit 1800 that gold's just a novelty and that it's not here to stay. But a lot of people, a lot of long-term investors believe that hitting 1800 it creates a buying opportunity. And I think that if you're a long-term investor, that's something that you should consider. Obviously, weigh your risks, be conservative, but I do think there's going to be some buying opportunities in the gold market over the next 12 to 18 months.
Are you just getting into metals and you want to learn more? Check out our gold and silver investment guide. It has all the information you need, all the questions answered, and a really good read for someone just starting out. If you want to learn about investing in gold and silver, click the link below.
All right, folks, there you go. Colin Plume is, again, he's on top of it, and it's a great company, and you can feel very comfortable with them. And I tell you, I'm very, very glad that we've teamed up with them. Colin, also, we're talking big debt, big inflation, big taxes. So, one thing about it, if this next, and oh, by the way, I still don't know how this is going to end up. I mean, the Supreme Court heard Ted Cruz's argument over the Pennsylvania mail-in ballots, and we're still waiting on an answer today on what that's going to be. But that's not as big a deal as this Texas lawsuit against Michigan, Wisconsin, Pennsylvania, and Georgia. And now 7 more states have joined Texas. And this is going straight to the Supreme Court. And it doesn't have to go to any other court. It's going straight to the Supreme Court. And if they flip this thing, we got a whole different ballgame. What is your take on this? And what do you think it might be going to happen? Or what does it mean?
We're in uncharted waters. I think it's pretty safe to say that we've never seen anything like it. I think we're exhausting all the options, and we'll see what they come up with. I mean, I think the sad part about this is with all the technology in the world that we can't come up with a system that's more that everybody feels is secure. And that's the big, question mark here is this secure? So it's hard to say, hard to say which way it's going to go, but obviously I'm glued to it. I'm glued to the TV on this.
And probably because this does change, or I don't know if it changes strategy. I understand that I think you'd see bigger taxes and bigger spending probably under a Biden administration, but it doesn't really change much with the debt, the inflation, and the COVID and the impairment on the world's economy. And will it make much difference as it relates whether or not you should be in precious metals right now?
Yeah, I mean, there's nothing going to be changed. I mean, we've gone down this path, and the bailouts are where we're going to continue to go. Taxes would be the big one. Yeah, I definitely think that could make a big difference. And I think based on what I'm hearing, a lot of people probably are going to be liquidating some of their equities if it does look like Biden is going to become president, because a lot of people are going to say, hey, I'd rather take it this year while it's lower. And so I wouldn't be surprised if depending on how things go, if we see a big sell-off before the end of the year. I think a lot of people are watching right now, perfect example, Tesla, a very inflated stock. There's a lot of people in a heavy profit position there. They're probably waiting to see. They think Biden's going to be in office, and they're probably going to liquidate that stock before the end of the year, pay the tax based on this year. And I know there's a lot of people out there. I've had conversations with friends that are heavy in the stock market that are going to be doing some pretty heavy liquidations before the end of the year. So if you just expand that, I think that the first quarter for the stock market, if Biden does become the president, could be pretty detrimental with a lot of these heavy liquidations.
Colin Plume with us, folks, noblegoldinvestment.com. Pick up the phone and call him today at 877-646-5347. That's 877-646-5347. Colin, what about big tech? I mean, big tech, we hear the president talk about big money, big media, big tech. Like you said, we should be able to have an election. I mean, we got debit cards, ATM machines forever. And right. How in the world can we not have a system that will work? But do you think big tech, those stocks have been strong and they've been leading the way? Will they stay up there in the next 5 years or so? Do you see them still leading the way, or will it shift to some other industry?
No, I definitely. I mean, I think big tech's where it's going to be for a long time, and because we've become, especially now with the promise of most people working from home. I mean, I don't know if you remember, but early this year, I had mentioned that they were talking about getting close to 50% of people working from home before around 2031. That's what they were looking at. This was before the pandemic. Now, obviously, that 50% number after things open up, they're looking at the next 3 to 4 years, hitting a 50% number of people working from home. So how will that be achieved? It's data, so data is going to move the needle. So I definitely think it's a smart place to be in terms of where things are going to go. I think that, the industries, typical brick and mortars, the malls, office space, your big chains are really going to struggle. Even companies like Walmart, who were really late to the game, and I don't know why, in terms of delivery services and having that capability, they're going to hurt over the next 3 to 4 years. Anything around people working from home, anything in that genre is going to be pretty strong. It's not going to go back. I have colleagues, I'm in a number of groups with other business owners, and every business owner that I know is looking at ways to reduce their office space over the next 2 to 3 years. Even one business owner I talked to that owns a very large high-rise in a major city that's going to be looking to sell that high-rise and shrinking their office space. So I think we're going to see a nice consolidation there. So people need to be wary of that. It's not like it's just when the vaccine comes out, it's not like just people are going to start going back to the office. I think businesses have seen that people can function this way effectively, and I think they're going to continue to move in this direction. So I wouldn't shy away from anything big tech.
And so I guess the next question would be, all right, if 50% of the workforce ends up working from home, we don't need all this office space, we don't need all these malls because Amazon is shipping everything. What happens to the developers and what happens to the banks? And do you see a big bank bailout coming?
Yeah.
Because they always get bailed out.
Yeah, I do. I do think that that's going to eventually have to happen. And I think, what they'll do is they'll just, like they did in 2008, the banks that survive, they'll fund them so that they can keep those large spaces on the books. And a lot of those spaces will just get converted to apartment buildings or condos. And they've done that in a lot of major cities, but that's what they'll do. They'll just move into that direction. And if they continue to keep interest rates low, I think what will happen is you'll see, more millennials start to buy homes. I think that's the new trend. As 10 years before that, millennials weren't going to buy homes. They wanted to be free and move around. But I think if they keep interest rates this low and they start to convert some of this space and people can get into some of this space at a reasonable rate, I think you'll see this new generation start to buy, 1 and 2 bedroom condos to live in. So that's really the only way to go with a lot of this space is to turn it into a single family. And then those people will just work from home in that single family unit. So it'll be different. The tax structure for those states will be compromised for many years. That's a big part of it. Obviously, you have these large employers with these large office spaces, and that's a very consistent tax revenue, and that's going to go away. So I think we're going to see people start to isolate a little bit more, buy these 1 and 2 bedroom condos. Some of them will be turned into apartments, and they'll just create an unbelievable infrastructure within those buildings for people to never go anywhere. Markets will be close by. Everything will be, I think we're going to move towards probably where we were in the 20s and 30s, where it was more of that kind of city module where people lived close to the things that they needed and they didn't travel too far out of that circumference.
Unbelievable that what's been here, we go right back, cycling ourselves right back. It's incredible how industry changes as people. Incredible. I'm also looking at this, Colin, back to this. So through all of this conversation, it still comes down that your 401k right now, for the folks out there watching, they got to really be concerned about this 30,000 on the market, which I said was going to happen this year. But when COVID hit, I said, oh, forget it. It's not. But it did. But I don't think it's going to stay there in 2021. I think we're going to see a new correction. They really need to get your money into precious metals. Do you think that's right?
Yeah, like I said, I think depending on what's going to happen in the election, if it looks like Biden's going in, there'll be a big sell-off before the end of the year. Could happen within 3 to 4 days before the end of the year. And then obviously the inauguration happens not too far after that. So I think it'll be the first quarter of next year is going to be real rough for the stock market, in my opinion. So we'll see how that shakes out. If that's just a quick shakeout and things kind of get back to normal there, if we'll see that massive pullback that a lot of people are looking at. But yeah, I think what we're seeing is people are, right now we're very busy through the holidays. We're anticipating to be very busy. A lot of people moving their accounts, and we're going to have some of our staff take some time off, but we will have staff working through the holidays to make sure that anyone that wants to get their IRA set up, that they can do that in physical gold. And obviously it's not a big thing, but we do have our promotion, this month. You get that 1 10th-ounce gold American Eagle coin, that proof coin. If you do an IRA with us, that's shipped directly to your doorstep. It's a $300 value, very beautiful coin, limited edition. They are changing the look of the gold American Eagle next year. So this will be the last year that the coin looks like that. So I, for anyone that's on the fence, maybe a little gift kind of gets them started, and it's a nice way to start it. And it's a nice way to protect yourself before the new year.
It really is, folks. As you guys know, we've been showing it to you, all the time, and it is spectacular. And the value is going to go up. It was minted in 1988, I believe. Yeah.
The coin will have a different date. The date they're all different dates.
Okay.
That you got 1980, which is actually, that's a great coin because they just started minting that coin in 1987. So you basically got the second year of that coin, and they only. They make a very small amount of those proof coins. Those coins, that coin you have has never been touched by human hands, comes with a certificate. They only make, in any given year, they make between 20 and 50,000 of those coins, which is, when you're talking about coins, newly minted coins, it's a very low amount. They make 37 million 1 ounce silver eagles per year. So to get you an idea, 20 to 50,000 per year they're making of that coin you have. So someone that does an IRA with us will get one of those limited edition coins.
Beautiful coin, folks. You heard Colin say it's worth $300. He'll give it to you. And what a nice way to get started. And also secure your funds. And boy, if you got a 401k, roll half of it over. I would say that. Roll half of it over. Don't take my word for it, though. But check with your investors. But protect some of your funds, no doubt about it. Colin Plume's the guy to see. Go to noblegoldinvestments.com. That's www.noblegoldinvestments.com. Pick up the phone and call Colin at 877-646-5347. That's 877-646-5347. Christian company, they're family-owned, great people, and Colin does a wonderful job. And we're going to show you, Colin.
Keep your fireplace open because Santa will be delivering that coin for Christmas. So don't block your fireplace. Let him come into the fireplace and drop that coin off for you.
That's right. That's right. Let him drop it in. Don't stop him. Don't leave the cookies and milk out, everybody.
Exactly. Yeah, they're great gifts too. A lot of people, if you're looking at some gifts for your grandkids. Those coins are fantastic, and so if that's something you're looking to do, give us a call. We're still until the 19th of December. We can get coins out to you before Christmas. So give us a call if you want to get something out to your loved ones before Christmas.
Colin Plume, noblegoldinvestment.com, 877-646-5347. Colin, we appreciate you being with us today, and thank you for the good insight. So help us prepare for 2020 in this volatile world. So God bless.
It's been interesting for gold investors, to say the least. After surpassing its all-time high, it's been resting in the $1,900 range before dropping in the $1,800 range, then back to $1,900. This seeming volatility is inspiring investors to ask, when is a good time to buy gold? Should I still be buying gold? Is there anything left to gain? Or should I cash out? First, I would say don't panic. Pullbacks are common. In fact, they're expected. It's true in every investment you're going to make. There's no single investment that will constantly be bullish. That being said, the price shifts of gold in the last several years are by no means wild. In fact, now, in my opinion, is a really good time to buy gold because all of the economic factors lead us to believe buying gold is a good opportunity. And I can't honestly think of anything more perfect right now than a gold investment. And there's two general reasons that it's a good time to buy gold. One, gold's rising potential industry is one of the reasons that people should invest right now. There's an increase in demand for communication devices, phones, data servers, computers, medical research, aerospace. Obviously, we've talked about curing cancer. There's some research going there. All these are heavy users of gold. Second is just the global political economic situation, social instability. We have an election coming up. We have fundamental concerns regarding the U.S. dollar. We're still fighting everything going on with COVID and whether we're going to reopen or not. And then the biggest thing, in my opinion, is just the unprecedented amount of stimulus, the low interest rates. It's the perfect opportunity for gold. There's other factors there too. People see gold dipping in the 1800, they may get nervous. And a lot of people were saying when it hit 1800 that gold's just a novelty and that it's not here to stay. But a lot of people, a lot of long-term investors believe that hitting 1800 it creates a buying opportunity. And I think that if you're a long-term investor, that's something that you should consider. Obviously, weigh your risks, be conservative, but I do think there's going to be some buying opportunities in the gold market over the next 12 to 18 months.
Are you just getting into metals and you want to learn more? Check out our gold and silver investment guide. It has all the information you need, all the questions answered, and a really good read for someone just starting out. If you want to learn about investing in gold and silver, click the link below.